Hey guys, and welcome back to my channel. In this week's episode, we're going to talk about how the Bank of Canada just raised interest rates to its highest point in 22 years, how I think this actually presents opportunity in the real estate market, and finally, we're going to talk about new disclosures coming to protect home buyers in the Lower Mainland. Real quick before we get started, if this is your first time to the channel, my name is Hassan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you safely navigate the real estate market. I also make content designed to help you make your move in and around Vancouver. So if that sounds interesting to you, do two things. Number one, subscribe to this channel so you don't miss a future weekly video. And if you want to chat about your situation with me one-on-one, you can book me for a free call in the Calendly link below in the description. All right, so what came as a shock to literally nobody is the Bank of Canada raised interest rates 0.25% to 5% now. This is the highest rate they've had since 2001. What this does now, obviously, is it triggers the banks, the lenders, to raise their prime rate. So prime rate now sits at 7.20%, and essentially variable rate mortgages are based off of that prime number. Now, in terms of its effect on the real estate market, a lot of people were expecting this to happen, and after we've had so many consecutive raises, this additional 0.25%, it's somewhat of a drop in the bucket considering where we have come from. We essentially were at 0.25 during the start of COVID. Now we're sitting at 5%, so an increase of 4.75%. So it was somewhat priced in terms of its effect, but here's what's going to happen in terms of the real estate market. People that are on adjustable payment variable rates, meaning that the payment will go up now because of this interest rate increase. They're going to get letters in the mail. Their payment will adjust. Those are on a fixed payment variable. Their amortizations will continue to get extended. Some of them will hit their trigger rate where the entire payment is now going towards that interest portion. And people on fixed products, they're not going to feel any sort of pain until the renewal of the mortgages. So look, it's getting to the point, and I mentioned this last time, that the Bank of Canada does realize that raising interest rates is inflationary. And in fact, the governor of the Bank of Canada did admit this as such. He said, if we pulled out the mortgage interest component, which is essentially 30%, over 30% now of the upward driver of inflation, if they pulled that data out, we'd be sitting at 2.5% with a target of 2%. To me, it looked like he is kind of in a situation, the way he's expressing it is, what else am I going to do? This is the only thing I'm able to do is to raise interest rate. And they do that to try and quell demand. But, the question that I have is, when you are trying to quell this demand, yet you have 1.2 million immigrants coming to Canada this year, you're artificially trying to do something that's impossible, and what you're actually ending up doing is you're dropping supply down. So housing starts now, each year they're getting lower and lower because as interest rates go up, borrowing costs go up, builders don't want to build. They don't want to take on that additional risk. It's eating into their margin. So supply goes down. Essentially, you're not actually doing anything for the demand, and you're just bringing supply down. In terms of opportunity in this market, though, I believe there's always opportunity. I think with this additional interest rate increase, I think that investors that are holding rental properties, especially ones that have tenants in there for a longer period of time, say over 1-2 years, many of them are now going to place their units on the market. I said this was going to happen in Q1. We saw it happen in Q2. We're going to see much more of that. I think the rest of this year is going to be the year of the tenant-occupied property hitting the market, rental investors saying, look, rent control here is making it as such that I can't make money on this rental. Let's just get rid of it. And the reason that I think that this presents excellent opportunity for a first-time buyer is these units are not being purchased by other investors. They're not going to compete for this product. So I know it sounds counterintuitive after a Bank of Canada rate increase where mortgage rates are now sitting in the low to mid sixes, where the stress test is into the 8% now. What I would say to people, and especially first-time buyers, is when working out the numbers on a fixed payment, on a fixed mortgage, if you are comfortable with what that payment looks like, I truly think this summer into the fall, you're going to have opportunity to target investor-owned properties that have tenants in them. And if the tenants are not on a term, you're obviously able to move yourself in, and you're not going to be competing now with that investor. And what typically happens when we hear about all these multiple offers in hotter markets, what very often happens is you have a bit of a battle between an investor and what we call an end user, someone that's going to move into the property. So they're vying for the same property. It drives the price up. Usually at the last minute, it's actually the investor that drops out because they don't have that emotional attachment to purchasing that property. If the numbers don't make sense, they're not going to do it. So they drop out, but it inflates the price. The end user buys it at a higher price. And that's ultimately what ends up happening. So now if you go for these tenant occupied properties and your agent can specifically search for these, there are strategies how we can target these properties specifically and how we can win them in offers. But if you start targeting these types of properties, you know you're not up against the investor. Look, we're in the dog days of summer. This is typically when things slow down. Sales have slowed down, inventory has slowed down, does generally pick back up in September. There's another rate announcement at the beginning of September, so we'll see how that affects things. But again, if I'm a first-time buyer, and if you live in Vancouver, you have to look for these opportunities. If you're trying to get into the market, you have to look for opportunities like this because, as I mentioned, you have all these newcomers coming to Canada. You have Canada federally making it easier now for Hong Kong residents to immigrate to Canada. They're removing an education component in their PR program. So you pretty much have the Bank of Canada raising interest rates, trying to essentially deflate the economy. You have the floodgates opening with newcomers coming to Canada, which is inflationary, and you have housing starts dropping and supply dropping. So if you do that simple equation, if you write that out, you can see that over the long term, Vancouver real estate prices will continue to go up because as the rates go up, now what happens is it pushes some people obviously to continue renting. So the demand on the rental market becomes stronger. And then when that happens, real estate prices, sale prices continue to increase as well. So we're going to switch gears here a little bit. I'm going to talk about new disclosures coming to the Lower Mainland to protect home buyers as of July 17th. I just recently gave an example about multiple offer scenarios and how oftentimes it's an end user versus an investor driving up prices and then the end user purchasing that property. How it works with multiple offers as it stands today here in the Lower Mainland is there is a lot of trust between the agents. So what'll happen is, suppose there's an offer presentation at 6 p.m. You have viewed a property and you like it. You want to put your offer together for that property. Now, as a real estate agent and as yourself as a buyer, we don't really have a clear line of sight into how many offers are on that property. And of course, as you're trying to strategize about what sort of offer you want to write, it comes down to two things. It comes down to your own comfortability, what your threshold is, and then it comes down to what you're up against in terms of amount of offers. So what will typically happen at this point, and I'm not going to share my entire multiple offer strategy here, but any realtor that knows what they're doing will tell you is you do not want to be the first person to submit an offer, and you always want to try and be the last. So if that offer presentation is at 6 p.m., it's very normal for me to call a listing agent and ask them how many offers they have, and they'll say none, and likely they have none at that time. But half an hour later at 6 p.m., everyone submits on the buzzer, and now they have 3 or 4. Now, how we base our offer is based on what that listing agent tells us. If he tells us they have 5 offers, I take that back to my buyers. We decide if we even want to compete at that level. Or he tells me we have 1 offer, we'll dictate our price that way. So typically you'll have your offer prepared for the most part, except for the price, which you would enter at the end and submit your offer. Now, in terms of the disclosure that's coming, what we're going to be able to do now as buyers and as buyers agents is we're going to be able to verify that what the listing agent is telling us in terms of amount of offers is correct. Because buyers feel that, the listing agent can just say whatever number they want. They could say they have 5 offers and now, you really want the property. You end up writing a really high price for it. What if the listing agent only has 1 or 2 offers? And so what this disclosure is going to do is the listing agent is going to have up to 1 day to provide the names of the brokerages that submitted offers and confirming how many offers there actually were on the property, signed by both the seller and the listing agent. So again, as of right now, it's a verbal trust sort of thing. After July 17th, we're actually going to have a documented sheet. Again, we'll get it within a day of. So Does it protect home buyers? It does in some way, because obviously we're able to verify what the listing agent is telling us. But the big gap in this sort of thing is it's not real time. So as we're writing that offer, we're still basing it on the trust with the listing agent. Now, I'm going to tell you something that should help you appease your mind in terms of, are listing agents going out there and lying about the amount of offers that they have? Look, I'm sure it happens at some level, but I think the amount that it happens is very, very minimal. And the reason why is it's not only unethical to lie about the amount of offers you have, but it's not actually advantageous if you really think it out. So for example, I'm a listing agent and I have no offers in my hand on offer presentation night. So now if I want to be unethical and I want to talk to buyer's agents and say, hey, I have offers to try and drum up some business, they're actually very likely, those buyers, they may not even write an offer, because a lot of times there's a lot of buyers out there that they don't want to compete at all. So if you have 0 offers, for example, on a listing presentation night and you're a listing agent, you should be able to turn that into at least 1 or 2 offers. And the way you do that is you call the other agents and you say, look, I don't have anything at this point. Does your client want to write? They may have felt that they were going to have to compete a lot harder for the property. So oftentimes you go into offer presentation at 6 p.m., you don't have anything in your hand, and then by 7 or 7:30 you have a couple offers, because buyers come back to the table saying, I'm not going to have to compete as hard. I think I have a good chance at this property, and they'll come and write an offer. Now, another scenario would be if you have 1 offer in your hand, a listing agent, would they lie to try and get 2 or 3 to make it seem like they have multiple offers? Well, if they go back to buyer's agents and they say, hey, we have 3 offers in our hand, it's that same scenario I just mentioned. A lot of buyers will say, okay, I don't want to compete. And in that case, it backfires on the listing agent and they only have that 1 offer to present to their seller. So I don't believe, in my experience, that lying about how many offers a seller has or a listing agent has, I don't believe that it is very prevalent in our market. But again, what this disclosure is going to do is it's just going to make sure that everyone in the industry, every real estate agent, remains and stays honest about the amount of offers they have. Now, this disclosure is not going to tell you what the price was of the offers. It's not going to tell you the terms and conditions. It's not going to tell you why a seller chose one offer or another over another, but it is going to confirm the amount of offers, so you do get some peace of mind. So there you have it, guys. I hope you enjoyed this week's video. If you did, hit the like button, because what that does is it's going to take the video, it's going to send it out to more people so they can learn from it as well. And if you enjoy this weekly real estate content, hit the subscribe button so you don't miss next week's video. And lastly, if you are in the Vancouver area and you need any help with your own real estate situation, you have any real estate questions for me, you can book me in the Calendly link below, or you could also send me a text, give me a call, shoot me an email, whatever is easiest for you. I'd love to chat with you one-on-one, but outside of that, I hope you have a great week, and I look forward to seeing you in next week's video.